The people who made life-changing money in crypto don't look like geniuses in hindsight. They look like ordinary people who did 7 things consistently, while everyone around them was panicking, doubting, and waiting for certainty that never came. 7 habits. That's the entire difference between the investors who got rich and the ones who watched it happen. Here they are. By the end of these 7 habits, you will not just understand how crypto wealth is built. You will understand exactly why you haven't built it yet, and what to do about it. These are not strategies reserved for people with thousands to invest, or years of experience. They are behaviors. Available to anyone. Starting today. Let's begin. Habit 1. The investors who got rich in crypto stopped checking the price and started studying the forces that move it. Federal Reserve policy. On-chain wallet growth. Developer activity on the network. Institutional positioning. Price is a lagging indicator. The smart money has already moved by the time most people see it in a chart. Think of it this way, most people watch the speedometer and wonder why they're going nowhere. The successful investors study the engine. Understanding what drives Bitcoin, not just where it is right now, is the first habit that separates every serious investor from every casual one. Habit 2. The single most reliably profitable behavior in crypto. Buy a fixed amount. On a fixed day. Every month. Regardless of what the price is doing. This system removes the 2 most expensive words in investing, not yet. When prices drop, you buy more crypto for the same amount of money. When prices rise, your existing positions are already growing. The habit works precisely because it requires no decision-making in the moment. You are not timing the market. You are systematizing your participation in it. And there is a profound difference between those 2 things. One requires perfect judgment. The other just requires consistency. Habit 3. This is the hardest one. Every significant crypto gain in history required someone to sit through a moment where everything felt like it was ending. Bitcoin dropped 83% in 2018. 53% in 48 hours in March 2020. 77% in 2022. The investors who came out wealthy on the other side of each of those crashes didn't have better information than the ones who panic sold. They had better emotional architecture. They had pre-decided, before the panic arrived, what they would do. And when the crash came, they did it. They closed the laptop. They did not click sell. Habit 4. The unsexy one. The one that most people skip. Every year, billions of dollars in crypto simply disappear. Not to bad trades. To hacks, lost passwords, exchange collapses, and phishing attacks. The investors who kept their wealth long enough to actually benefit from it treated security as seriously as they treated their returns. Hardware wallet. Seed phrase written and stored offline. Never leaving significant amounts on exchanges. These aren't advanced techniques. They are the baseline that separates people who hold their wealth from people who held it temporarily. Habit 5. And this is the one that separates every amateur investor from every professional investor I have ever observed. Zooming out. When Bitcoin drops 30% in a week, the amateur sees a catastrophe. The professional sees a single data point on a chart that has returned over 1,000,000% since 2010. Your time frame determines your reality in crypto. The investors who got rich didn't trade every swing. They held a thesis long enough for the thesis to play out. That sounds simple. It is almost impossible to actually do, unless you have trained yourself to look at the long arc instead of the daily noise. Most people are looking at the wrong chart. Not the wrong asset. The wrong timescale. Zoom out. Everything changes. Habit 6. The worst crypto decisions in history have one thing in common: the investor needed the money. When your rent payment depends on Ethereum's price, you cannot make rational decisions. You will panic at exactly the wrong moment. You will sell at the bottom. You will destroy in 1 week what it took months to build. The habit is this: only invest what you could forget about for 2 to 5 years. Not because you're going to forget, but because that psychological stance is what allows you to hold through the difficult moments. The amount you invest is less important than your ability to leave it alone. Start with what you can afford to forget. Then let it compound. Habit 7. This is the level most people never reach. Because it feels uncomfortable. The most successful crypto investors didn't just invest their capital. They invested their understanding. They wrote about what they were learning. They built audiences. They taught. They advised. As they learned, they earned. Their understanding of DeFi became a content series. Their portfolio strategy became a community. Their financial education became an asset that generated income independently of what the market was doing. In 2026, your knowledge is as investable as your capital. You don't need to be an expert. You need to be one step ahead of someone else, and willing to share it. That is what this channel is built on. And it's available to you starting today. Build the habit of learning publicly. It's the one habit that compounds everything else. 7 habits. Every single one of them is available to you starting today. The gap between a struggling crypto investor and a successful one isn't intelligence, or timing, or luck. It's these 7 behaviors. Practiced relentlessly. Subscribe to WealthVerse. Next week, Habit 1, the exact market study framework that helped me understand crypto at a level deeper than price. You don't want to miss it.